Hello my fellow freedom builders and welcome back to the channel. This week we had some inflation numbers coming out and I promised you a little video where I would comment on them, so here it is. The topic is a bit complex and I have made videos about it before, but I'll try to make it rather short here, and as always, if there are questions, if some of the stuff I talk about, if you don't think it is explained well enough, then you're always welcome to write me some questions underneath the video or on the Building Freedom Facebook page. Alright, first of all, what is inflation? That is an important thing to understand when we're talking about economy and the stock markets. Inflation is your money that is getting worth less. So that if you get $100 in your paycheck and you can buy $100 worth of goods for that this year, then next year the same amount of goods might now cost $105, but you're still getting paid $100, so you can buy less goods. That is basically what inflation is. Alright, so why is that a topic? Why are we really discussing it? Well, inflation has become kind of a topic, or kind of a thing that we use to describe how much energy, how much power there is in the economy. So right now, Fed, the central banks, they're talking about they want a decent amount of inflation in the economy because it shows some sort of momentum. It shows that people are buying and salaries are going up and so on. Very good. The question is, can we trust the official numbers? The short explanation is no, I don't think we can, and today I'm going to explain a bit about how and why. One of the reasons why inflation is so important, of course, it is to you as a consumer if you can buy less goods, but also it is important because when we are saying banks loaning out money, let's say a foreign bank is loaning money to the United States. Now, if they know that they are loaning money out in the US dollars, and the US dollar is getting worth, let's say 2% worth less in a year, then of course they want an interest that is higher than 2%. So they want interest enough to cover the inflation, and then they want some interest so they earn some interest on their money. So if the inflation is 2% and I should loan some money to United States, I would say, yeah, I want 3 or 4% in interest so that I cover the inflation and I make some money on my own money. But the thing is that the inflation numbers have been very low, and that has kept a lot of good things going for the United States because they're really a lot in debt. So right now they are trying to balance this off, where they are saying they want a higher inflation. They are saying that the inflation is not very high, and they're trying to keep the interests low. It is a very complex situation. Let me show you some charts and some articles here. First of all, let's just have a look at the charts. Here we see the government bond 10-year yield, meaning this is not the price of the bond, this is the actual yield that that you would have to pay for borrowing money over 10 years by the bond system. And as you can see, it has been going up massively from around 0.5% and up to almost 1.8% up here. So almost 4-doubled here just since last summer. This is quite massive, and this is simply because the interest rates fell off here quite dramatically at the spring last year because, of course, we had the virus crisis, and now at least the rumors of the economy upswing is here, and that is also pressing the inflation and the interest up. Now, this is just one way to see that prices are actually going up and that you will have to pay more for your goods. We could also see at some of the commodities. For instance, we could see copper, the copper futures here. As you can see on a weekly chart, the price of copper has gone up since last March here. It has gone up 110%. We could see some platinum that has gone up dramatically. We could see some steel has been going up in a straight line here. So pretty much all the commodities that you actually use to produce stuff with have gone up dramatically. This, of course, is increasing the prices for the manufacturing plants so that they are earning less, and then they have kind of two choices. They can say, all right, we accept to make less money, we are eating this higher price, or they can say we want higher prices for our goods, and then this price inflation is slowly being pushed out on the consumers. And this is actually what we are seeing right now. So let's try and have a look at some of the articles coming out here. First of all, the official inflation number, if you look at that, the one that came out here, that is the overall, it's called the CPI. The consumer price index. There's also another number that is called the PPI, and that is the producer price index, and that is the price in the manufacturing part of the chain. But this is the inflation over the last 12 months. Now Fed is saying this is not really that bad, because the only reason why this is high, this is measured over a year, and the only thing this is really high is that it was really low a year ago. So this is the only reason. This is a temporary situation. The reason why they're saying this is that if people are looking at a trend going up here and they're trying to extrapolate this, and they're saying, yeah, well then we'll reach 4% in no time, then of course the interest rates will skyrocket, and a lot of the expenses in the United States will skyrocket, meaning that it will, I wouldn't say it'll be the end of the United States, but it will definitely be a dire situation. So this 2.6% is one we should remember. And then let's just have a look at some of the numbers here. First of all, the 2.6% is including everything. And I've talked in former videos about that the calculation of inflation is actually flawed, or at least it has been changed a lot of times. And what I've said in my last video is that if we are just looking at the normal basket of goods and saying how much is that getting worth more over year over year, then the inflation is actually a lot higher. I'll get back to that in a second. But if we are looking at the inflation here from 68 to 2021, we can see a lot of numbers, but the one that really interests me here is that this is the inflation all items, 2.6%. Now, a lot of people and also the Fed are talking about the core inflation, all items, less food and energy. For some reason, they don't think that food and energy is really worth mentioning. We're just looking at all the other stuff, and that is only 1.6%. Now, that sounds very low. However, if we look at some of the items that are really, really important to the private US citizen, we can see that food is important, 3.5%. That is a lot higher than the 2.6. And then energy, and here we're talking gasoline for the car, we're talking about heating oil, we're talking about gas, 13.2%. And I know it was in a slump in last March, but this is huge. So when we're looking at these numbers, we can actually see that the food inflation has been quite low, and food is kind of an important item, I think. But here in 2020 and in 21, we can see that the price is really going up, and is going up a lot faster than the salaries are in the United States, meaning that the most important part of people's life, the food we eat, is getting harder and harder to have money for. We can see it a bit more in details. Let me find it here. We can see, and this is, I'll link to this below, but this is a US Bureau of Labor Statistics, so this is not just any page, this is the official numbers. And what we can see here is that, again, all items, 2.6%. Food, 3.5%. There's a bit of a difference between the food you just make at home and the food away from home. But then we have the energy, 13.2%. If we see the gasoline, all types here, 22.5%, meaning that this is driving your car. And right now, when the pandemic is slowing down and people are going to have to drive to work again, then 22.5% more on gasoline is quite dramatic. Fuel oil, 20.2%. And this is the real live people's money getting worth less. This is significant. We have electricity 2.5%. That is pretty much on line with the overall here. We have pipe gas services 9.8%. We have commodities, less food and energy commodities, and again we are taking food and energy out of it. Doesn't really make much sense. We have new vehicles 1.5%, and then we have used cars and trucks, which is actually what people used to be able to afford, even if they're poor. We can see 9.4%. That's quite dramatic. Then we are seeing some minus numbers, and the funny thing is that when they are constructing the overall CPI, the inflation number here, they tend to put more and more stuff in there that has a negative inflation. For instance, we have medical care and commodities that is getting a higher weight here. We have some transportation services, and I think in this category must be something like flying, like plane tickets. And what we can see is that the funny thing is that flying on a plane is actually counting negatively here, and that's fair enough. But the last year you have pretty much not been allowed to fly, so why should that have a higher weighting in the overall inflation package, when what really means something to people, it is fuel, it is heating, it is food, and that the prices on that has exploded. So trying to say that the inflation in the United States is 2.6% is kind of a stretch, if you ask me. I have shown another site here before, and that is something called the Shadow Stats, John Williams Shadow Stats here. I recommend that you visit that page once in a while. But what we can see here, there are all sorts of alternate data, and John Williams, he's taking the calculations that they used to use when they were calculating, for instance, the CPI. And you can see right here, this is the official CPI, and that has been going up here, as I just showed you, 2.6%. However, if you're using the same calculations, the same way of calculating the inflation as they did in 1990, where they actually took the real goods and saw how much have they gone up in price, and the weighting stayed the same, and there were not really any changes and manipulation to this inflation number. When we're using the same number as the same calculation as in 1990, we can see that the real inflation right now is actually more than 6%. So when we're looking at the interest rates here, and we can see, yeah, this is basically 1.6%. That is basically the core inflation without food and energy. But what if that number was 6%? Then the interest rates for United States should actually be 6% and then some, which would be enough to bankrupt United States in a heartbeat. You can also see here, there are also some 1980 based numbers. I'm not 100% certain what the difference is between the calculation from 1990 and 1980, but as you can see, if you use the same method as it did 41 years ago, the inflation rate would actually be more than 10%. And seeing the salaries in the United States going up by 1 or maybe 2% per year, if you're really lucky, then this might explain why a larger and larger number of United States citizens are relying on food stamps. They can't pay the rent and so on, simply because the real salary is dropping. So this is a very, very urgent matter, I think, if you want to understand the overall economy, the state of the economy in United States. There is simply no way that the inflation is only a couple of percentage points. Now, as I mentioned, the Fed is balancing this very tight, because what they actually want to show is that there is a lot of energy in the economy, everything is going good. However, they also want to say that the inflation is not very high. which is two things that completely contradict each other. But what they're saying is, yeah, it is going okay. It's not going too well. It's going, and they're using all sorts of political words here. Powell, the Fed chairman, said the other day that it was moderately okay, and they thought that they might be decreasing their bond buying somewhere in the future before they would actually increase the interest rates. And this is simply, that sentence does not make sense. And the market were completely confused about it. And they had to send another Fed boss out a couple of days later and saying, now we actually see the economy in a lot worse state, and there'll be a long time before we raise the interest rates. So this is kind of trying to put some oil on the water here. So it is a confusing picture right now, because the United States wants to show that their economy is going great, but on the other hand, they simply cannot afford the inflation to go up, because that would make the interest rate go up. I know some people would say, yeah, inflation would also make the current debt worth less when they have to repay it, but that is simply not enough to balance off that the interest rates would explode. So what we are seeing right now is a very, very difficult situation for the United States. Another thing we have to be aware of is that when we are talking about inflation, there's also another part of that, and that is called stagflation. Not many people have heard about it, but stagflation is what is called recession inflation. And that means that the inflation rate is going up or is high, but the economic growth slows. And I know that a lot of people would say right now that we are nowhere near stagflation, because that the United States economy is going great. They're showing a lot of signs of growth. Yeah, well, only kind of. Because what we see right now in the United States is economic growth, yes, or at least a lot of purchasing. We saw the retail numbers the other day going up and so on, very nice numbers. But just remember that the only reason why we see this is that they are putting a lot of trillion of dollars of stimulus right out into the market. Because if we're looking at the trade deficit, meaning the United States trading with other countries, we can see that United States are buying more and more from other countries and selling less and less to them, meaning that the deficit is growing larger. And that simply means that even though it seems like there is some economic growth in United States, they're not really producing more stuff to be sold outside the country. And that simply tells us that Fed printing money and the government borrowing money and just putting stimulus out with fantasy dollars, that is not a viable way to go. Yes, it could on the surface seem like there is some economic growth, but there simply isn't. Not enough anyway. So my prediction is that we will actually see the inflation going higher, but we will see a stagnating economy over the coming years. I think that the financial markets or the stock markets will go up, at least here in 2021, because of all this stimulus, and people are happy and they're getting stimulus checks and they're buying stocks with that, fine enough. But we will see the underlying economy getting worse and worse. So my prediction, if I should say so, is actually that we will see some sort of stagflation. Now, United States will deny that there's stagflation, because that's pretty much the worst state the economy can be in. It is way worse than having a recession or having high inflation, because having a recession and high inflation is pretty much it's a very deep dark hole to dig yourself out of. And they are in enough trouble as it is, so they will try with all means to explain to us that this is not stagflation, that they are doing great. In my opinion, we are witnessing United States economy slowly deteriorating, and we are seeing inflation going up. And in my opinion, in my book, we are seeing some sort of stagflationary environment in maybe 2 to 4 years. this is not something that I base my investments on. As you know, I am a trend follower, so yeah, I look at the charts and I'm buying strong sectors and strong stocks, and that I've been doing great doing that for the last 25 years. So the reason why I do this is I think as an investor it is crucially important that you understand the underlying environment that you invest into, because you have to see through, or be able to see through, some of these maybe it's a hard word to call it lies, but at least some of these politically motivated manipulations that are going on with the unemployment numbers, with the inflation numbers. It is pretty much a show, and right now the financial world, the stock market is running along, but at some point, in my opinion, I think it will be hard to keep hiding the fact that the emperor simply has no clothes on. So that is my opinion. I know some of you will disagree, and you're welcome to do that. You're welcome to comment in the comment section, either if you are agree or disagree. Just please keep it in a polite tone. That's all for now, and I'll put some of the websites I've shown in this video in links below the video here, and take care of yourself and your money out there. I'll talk to you again shortly. Bye for now.